Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's November the 19th. It's a little late that I'm getting this done, so um, there's only a few trades in here prior to the 1 o'clock. I didn't mark anything after 1 o'clock because that's just during the crazy news time. But if you notice the lines that I drew, price action is still valid during a news event. You can see that. This is where the news event came out right in here. And if you saw the midday chart today or update, talked about that. Generally, the whole day a lot of times will look kind of flat like this, but definitely the last hour or so, usually before FOMC news announcement, it looks like that, and it's just better to stay out of it. So, um, but you can see that even though it's a news item, it still followed the price action rules. And once it broke higher here, where do you expect it to go? Get a measured distance, measure this, and just add on to it. At first, this looked like a spike. This is a spike in a channel, but it turned out to be a two-tiered channel because the market was so strong. But it's still, um, just stay out. And I didn't mark anything after 1 o'clock. So, but let's talk about the trades real quick, and then, like I said, I'm gonna move through these pretty quickly. Um, when I came in, it looked like this, and this looks like a trading range, which it is a trading range. It looks like one. So when it starts to bounce right here, you figure it's going to go. And at that time, I had this a little bit higher, like so. Figure it's going back up to here. There's a little bit of overlap there, but look at the big move down. And generally, wherever you start to see congestion after a big move, it's because it's finding support or resistance, and it's probably going to turn and go the other way. So that gives you a little more reason to enter, but still a little risky. But it's a second entry long, counting off the lows. First entry pullback, second entry, and it's just a trading range. So you figure it's going up here. So I like that one for a long. Gets just enough for a scalp, and then it finds resistance and it turns down there. Once it turned down, just draw your trend line across there, drag it down, and you'll look for it to bounce down there somewhere. Um, but I like this one, but there's a caveat to this one. Only if you waited on it to break below here and then tried to get in a tick or two back, because you don't have much room here. There's not a lot of room here to get out, and so you got to be a little careful entering there. Um, but that's a lower high than that one. You got a double top and then a lower high, so you figure you're looking for maybe a measured move down there. If you get through here, you figure it'll probably get past here, and this is probably where you're going to find support, and you see that happen. But you got to be careful here. So I like this one only by getting in a little bit. I don't like using a stop there because it's too low. So it keeps on moving down, and then of course, where do you think it's going to bounce after you drew this line and you drug it down? Right off that line, and that's exactly what happens. And that's how we find these moves a little bit in advance, and that's doesn't always get there, but that's what you're looking for. This is actually a long here that I have circled. Um, it's actually the little green one. If you once the next one you get a break of that's green, and I kind of like that one because you got two legs there, and you've got like a leg here, and then two legs and another leg. Um, but this was a trading range, and this is like a failed breakout of a trade. Usually when you get a breakout of a trading range, it's coming back to test this breakout area, and and look how far away you are from the EMA. So at that point, I like that kind of as an aggressive move on a failed breakout of a trading range. You figure it's going to at least get back to the EMA, which it does, and it actually ends up going higher. And then it starts working across. Notice how it bounced right off the midline, and so it's headed back to here, but it's finding that, and that's your retest of the bottom, but it's finding resistance there. So just kind of sit tight. It's tempting to go short right there, but look, 1, 2, 3, 4, 5 overlapping bars. It's pretty bearish, but we're not back to the trend line. You got 5 overlapping bars. Just kind of sit tight and see what happens. And notice it did break and turn right back up there. And so just sit tight, sit tight. And look, you get a little breakout. Let's see if that'll fail and turn down. And of course it does. This is not a perfect setup bar either, but it's a failed break out of that little congestion area. It's confirming the trend line. And so you can probably use a stop right there, but you might want to wait. You might want to try to let it break lower and then use a limit order and try to get a tick or two back. But that's only a couple of 3 ticks there, so it's not a big uh, bar anyway. But look at it go; it just takes off, and it's working down this trend line, and you can see it working both sides. It was tempting to go short right there, um, and it's a nice bearish bar, but you never have gotten a break high or anything. Now you get a double bottom, it breaks lower, pulls back, and then turns right back down. And notice the midline there, it breaks below the midline. It's like a breakout pull back short on both the midline and the little double bottom across there. So it's a couple of different reasons. Plus it's right off the trend line. And so I like that one. And at that point, you're thinking it's probably coming here. It never does get down there, but that's where you're expecting it to go. And usually it will go on down there before it reverses. And but instead, you get your break, a move to a new low. But notice that you get this one working up. You get a break here, a move to a new high. So I kind of like that one. We weren't back to the EMA. There's a little bit of overlap. I was really this one's like right on the border of being green, but the reason I like this one is you've got that little high, that little break higher, and it tested it once. It's like a double test rule right there. And this is like a two-legged pullback to the EMA as well. Even though it went lower there, that's 2 legs back to the EMA. There's a couple different reasons to be thinking short. You do have the break of that little channel, move to a new high. So I kind of liked it. Once you got all those matching bars across there and stems, I didn't like going short. I didn't think you want to go long, but I don't like going short right there. And kind of the same thing here. There's just too much overlap. Now this does look very similar to this. This is almost a repeat pattern. So if you looked at it like that, I'm okay with you probably going short there. It did break higher first, but it couldn't break lower, so I didn't like that part about it. But notice that it's a double bottom, and so you can count this as either a new low, a single low, or you could actually say that was a second entry short. And that one was tempting, but I would wait on another push up first before I went short right there in all that overlap, and you get that here, and then it turns down. But look at this. That's a new low, first entry, pullback, second entry. So there's some different reasons to be aggressive and take that one. I don't really like it, but anyway, there's some reasons to take it. And then we fell out here, and this was real tempting to go long, but I think you got to wait. And you get a first entry right there, but look, you don't want to go short right there. Wait and see if you get a second entry, which you do. But look how everything's stacked up there. Everything's above the EMA. The trend line is actually keeping everything above at this point. So I think you're better off just to sit tight. And then when it turns back up, you got a failed second entry short. So just go long right there. You figure you're going to at least get a scalp out of it because of the trap. And then this is getting right into the, it's only, well, let's see what time it is now. It's still a little bit early before the 1 o'clock. It's not quite noon yet. But once you get into that noon hour on FOMC day, you're probably better off not to trade. And this is just a first entry. But it does bounce right off the trend line. It's somewhat bullish. There's some reasons to, and you figure you're probably going to retest this area at least. There's some reasons to think going long there, mainly because it's off this little trend line that's working up. And but it's a first entry. It's not the best signal bar. It's an inside bar. There's just reasons not to take that trade. It's getting close to the hour before trading when this kind of stuff happens. And so unless you're just being really aggressive, I don't see any reason to take that trade. And then, of course, we already talked about that hour before launch. Just stay out of that. When it broke lower, if you wanted to jump in with the news move, I would go with the price action, but I think it's risky. And again, I didn't mark anything after that because it's still real emotional. It kind of got back to normal right in here, and then it reverses and just gets back in this trading range that we started in the morning, and that was it. So not much else to say about today. Just not a, these FOMC days can be, usually you don't get this much movement. So usually a lot of times the whole day will look about like this or maybe even like this until you get right into that 1 o'clock hour when things go, haywire like they did. So, and this is pretty tame, even though this is uh, volatile with a lot of volatility. It's pretty tame for what you can see on FOMC days. So, but anyway, that was it for today. So, not much else I can say about today. Just kind of a slow. If you traded early, there were some good moves, and it just kind of slowed down into the 1 o'clock hour. So, but anyway, I'm going to wrap it up for today. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.